Hello students, I think everyone is watching the videos whatever I am sending. So please watch the videos and prepare notes based on these videos. So whatever there in the videos, whatever the slides I am providing, follow the slides, watch the slides, read the slides, understand the slides, then prepare a notes based on that. So I forget to inform you all that notes is mandatory for everyone. So please write notes without forget. Okay. So in today's class we'll discuss about the stock exchange and the function of stock exchange. So students, stock exchange is also called as a secondary market. So the stock exchange is an organized second-hand market for the purchase and sale of corporate securities. So students, whatever the securities we bought and sold in primary market, the same securities are going to trade in the stock exchange. That means a stock exchange is an institution which provides a platform for buying and selling of securities, and the securities will be existing securities. That means it helps existing investors to disinvest and fresh investors to enter the market. And the securities traded on a stock exchange consist of shares, debentures, and bonds issued by companies, corporations, and government to the public. Now let us know about the definition. According to the Securities Contract Act 1956, a stock exchange means an association or organization or a body of individual established for the purpose of assessing, regulating, and controlling the business of buying, selling, and dealing in securities. Which means the stock exchange is an association which is established for the purpose, for the intention of regulating, that means controlling of buying and securities of the security. So students, this is the example for stock exchange. This stock exchange is in Mumbai called Bombay Stock Exchange, which is very famous stock exchange in India. So next we'll discuss about the functions of stock exchange. That means the work of the stock exchange. Okay, so the first one, providing liquidity and marketability in existing securities. So the most important function of this market is the creation of a continuous market where securities are bought and sold. So this market provides liquidity for the investors. It gives investors the chance to disinvest and invest. This provides both liquidity and easy marketability to already existing securities in the market. And the second one, pricing of securities. So share prices on a stock exchange are determined by the force of demand and supply. A stock exchange is a mechanism of constant valuation through which the prices of securities are determined. Such a valuation provides important instant information to both buyers and sellers in the market. In simple, a stock exchange fixes the price of the securities based on the demand and supply of the securities in the market. And the third one, safety of transactions. So existing legal framework in a stock exchange provides safety of transactions and provides a safe and fair deal in securities market. Means the membership of a stock exchange is well regulated and its dealing are well defined according to the existing legal framework. This ensures that the investing public gets a safe and fair deal on the market. Okay. And the fourth one is contributes to economic growth. A stock exchange is a market in which existing securities are resold or traded. Through this process of disinvestment and reinvestment, savings get channelized into their most productive investment avenues. This leads to a capital formation and economic growth in our country. So, because of the trade of a securities, the growth of the economy also develop in our country. And the next one is a spreading of equity cult. So, the stock exchange develops the habit of equity cult among the public. Means the stock exchange is going to encourage public for investing into a securities, through which the investors are going to invest more and more into a different securities. And the last one, which is providing scope for speculation. So the stock exchange gives scope for speculation within the limit of the law, and it encourages the speculation activity in a restricted and controlled manner. So here in the stock exchange, speculation is a business of selling and buying of securities in a wholesale. That means in a large number of securities, the speculators are going to purchase and sell. This business is called a speculation business, through which they'll earn more and more interest as well as commission. So students, hope you understood the concept whatever I taught today. So please read and watch the videos properly and prepare your own notes based on this chapter. Thank you and have a nice day.